Yeah, so it might be of interest to know that I've taken a very different stance to the stance Axel took, in that my slides are short and have very simple points on them. And that's probably largely because it never occurred to me before this that anybody was going to look at my slides in 4 weeks' time. I'm taking not a technical approach here, but a little bit almost of a philosophical approach because of where we are in the sort of evolving lifespan of the IFRS for SMEs standard. I'm not going to go into the technical details in any way, but I'm going to try and talk about the environment, the general space where IFRS for SMEs stands at the moment. In doing that, I'm going to spend a little bit of time talking about the background, where we've got to until now, and then kind of in the last 3 or 4 slides delve into some of those details. Here's a bit of background just to where IFRS for SMEs is, specifically relevant to IFRS, so full IFRS, 123 countries, IFRS for SMEs in a little over 80 countries. Again, perhaps not a surprise to people to know that the difference between those two numbers is predominantly about Europe. And it's about the European decision to adopt full IFRS, but not to adopt IFRS for SMEs. And I'll get into a little bit of detail about some of the thoughts we have around that as we go through. When IFRS for SMEs was originally written, we had some very specific objectives as an ISB board in going into the process. And there are 1 or 2 people in the audience here, Robin particularly, who might have had more insight into this because I wasn't actually involved in the process at that stage. But I'll sort of talk a little bit about what we were really trying to do at that point. And the starting thing was that from an ISB perspective, we wanted to see a situation where there was a common language, a language that was used for accounting across the board. At the same time, we wanted to take special account of the requirements, the needs of SMEs, the needs of emerging economies. And the emerging economies one comes back a few times during the rest of the conversation because it's quite important in that. And it talks a little bit to Axel's points about where SMEs play, what their role is in this. We also took a view with SMEs that we wanted to encourage people to use them. So what you'll find quite a lot of the time with SMEs is there's an awful lot of material that we just give away for free. Support material, educational material, the standard itself and so forth, which is all part of that support mechanism for it. But I think the word on this slide that kind of should be underlined is the common language issue, trying to achieve a single language for financial reporting. Who's eligible to use it? Effectively, companies that are not publicly accountable, but that are required to produce general purpose financial statements. Now, I think general purpose financial statements was myth number 7. What the difference, I guess, is in the way we look at general purpose financial statements is that from our perspective, general purpose financial statements are those financial statements that are not prepared for a specific user. Now, I think when we were talking about, when the conversation was had earlier on today about the myths, I think that and I only saw the slides, I didn't see the presentation, but I think the point that was being made there was that any set of financial statements is actually a specific or a special purpose financial statements. From my perspective, and it comes to conversations like tax and the like, general purpose financial statements are very often only the starting point. I will start with a number, an IFRS income number, and then I will make adjustments for tax. I will start with an IFRS number and then make adjustments for capital retention or capital considerations. So you can't actually produce a single set of financial statements that actually meets everybody's requirements. So what you try to do is produce a base that people can use to adjust from or to work from in terms of where they're going with a particular set of numbers. That said, and one of the reasons why you do that is because tax law in every country is likely to be different. Capital retention or capital distribution laws in every country are likely to be different. So it becomes very difficult to meet the requirements with a single standard unless you accept up front that this is the starting point and thereafter I'm going to make adjustments to it. Publicly traded, it's an interesting word. It simply implies that I don't have anonymous trading, if you like, in my shares. I don't have people buying and selling the shares out of direct sight from me. Likewise, my debt, if my debt is traded, then I'm publicly accountable because I don't necessarily have contact with the people who are buying and selling my debt. I don't have contact with the people who are exposed to me. So the publicly accountable is a word that tries to draw the line between our two sets of records, between our two sets of accounts. The financial institution one, likewise, I have in a financial institution a lot of people who are giving me my money, who are trusting their money to me and looking for some kind of information. So we've kind of ring-fenced those out of IFRS for SMEs and said, if I have people anonymously getting involved in my credit, getting anonymously involved in investing in me, those people require additional information. They require more insight into what's happening in my accounts. If I have people who are closer to me, who have a direct relationship with me, the people who choose to advance me debt, the people who choose to invest in me in a direct relationship, the assumption about those people is they need less information from me. And the reason they need less information from me is because they have that direct relationship. They have the ability to ask for additional information. And if we start thinking about how we get to these two different standards, that's sort of where the line gets drawn between them. It's worth obviously also making the point that you can always trade up. And I think somebody made that point in one of the earlier discussions. You can always choose, if you are an SME, to produce fully IFRS accounts. You can always choose, if you are not required to produce general purpose financial statements, to produce them anyway, and then choose SME or full IFRS as your accounting mechanism. You always trade up, but you can't trade down. If you are publicly accountable, you can never go down to IFRS for SMEs. It's one of the more interesting questions that comes up quite often, and it's whether South Africans have an understanding of grammar. So I think that should say why a global SME standard rather than why global. There's a second question that comes into this, though, obviously, is why do we need global SMEs? And again, I think, Axel, you covered this point quite a lot in your conversation. Why do we need consistency in accounting across multiple jurisdictions for SMEs that are primarily located in a single jurisdiction? And the answer there covers sort of a couple of points. The first one is that SMEs are not necessarily restricted to a particular jurisdiction. Some SMEs can be trading in multiple jurisdictions. SMEs raise finance from banks, and they're not restricted from raising finance from banks in a particular jurisdiction. They may have creditors, they may have other counterparties in multiple jurisdictions. So there are reasons why you want a single set of accounts, why you want to actually be able to understand accounts when you're looking at them from different jurisdictions. It does, however, raise one or 2 points. Certainly, if I'm thinking of micros are less likely to be trading outside of their jurisdiction. And it raises the point about general purpose financial statements again. The point there is that if I am only producing financial statements for my tax authorities, my own banker, and maybe my sole shareholder, am I producing general purpose financial statements? The rationale, the thought process for the board is that no, you're not. And we would almost say those companies shouldn't even be coming into our standards, because that's not the space we play on. That's not our cricket pitch. Those companies should ideally be producing whatever is required in their local term. And I know in South Africa we talk about it as tax accounting. So you produce financial statements that are just compliant with the tax law, whatever that might be. Some companies choose to produce cash accounting, which I think we've referred to earlier. The hassle you've got in this space is jurisdictional law is not necessarily so distinguishing. In jurisdictional law, we've seen it in countries across the world, but Brazil is one that comes immediately to mind, doesn't distinguish general purpose financial statements the same way as we do. So it requires companies to use IFRS for SMEs that we probably would believe don't need to, because they don't produce general purpose financial statements. It answers a bit of a question a lot of people ask us about. A lot of people ask us, shouldn't we have a third level? Shouldn't we have full IFRS, IFRS for SMEs, and something that comes in at the bottom? And the kind of answer we're inclined to give is we already do. We say you've got IFRS, we say you've got full IFRS, we've got full IFRS, you've got IFRS for SMEs. And then if you're in that bottom category, well, do what makes sense for you. Use the guidance that's available in IFRS for SMEs to the extent that it makes sense. So we do think that there are three categories, we just don't give guidance for the third one. Well, another question that comes up fairly regularly is why does the IASB want to get into this space anyway? What's IFRS for SMEs got to do with the IASB? And I think, Axel, you sort of covered that fairly eloquently. And it's a fair question. And I guess the reason primarily that we get involved, or that we chose to get involved in this, is in some way selfish reasons, to facilitate the adoption of full IFRS, so to use this as a transitional step for people coming into IFRS so they could see where their next step was going to be, to actually have this common language that we're talking about so that a lot bigger group of companies could actually use the common language that's associated with IFRS, and also to produce something which was consistent with the IASB framework, with the IASB conceptual statements. And I think a lot of that was about us believing that our conceptual statements make sense to companies no matter how big those companies are. There's an underlying logic to those financials that is sensible irrespective of the size of the companies. The ancillary benefits that I'm referring to at the bottom there are actually things that arose more by accident. So we never targeted these specific issues, but they've become quite important as the SME standard is rolled out over time. That's not something I'm doing, is it? Okay, so I'm just checking that I'm not pressing the wrong button here on my remote. The ancillary benefits are things like educational process, the fact that you can actually have a common educational process through accounting, and some countries, a number of countries have chosen to actually do this as part of the educational process. Perhaps start the educational process around the conceptual standards, then move to IFRS for SMEs, and then step up to full IFRS. And it allows that sort of step-up process. I got asked at the tea break whether there should be a difference in the way an SME reports sales, for example, in the way a full IFRS company reports sales, and there shouldn't be. Because the concepts that flow through the two sets of standards should be similar enough that you achieve the same answer. You just achieve the same answer in one circumstance without needing to read through a lot of detail on all the various circumstances that might come out of it. That answer that I've just given you, though, creates one of the myths around IFRS for SMEs. And it's a myth that says, in order to apply IFRS for SMEs, I have to understand full IFRS. And it's a myth because that's not the case. IFRS for SMEs is intended to be completely standalone. That means I should be able to apply it without any consideration of what's happening in full IFRS. Our Chapter 10, I think, of the IFRS for SMEs actually tells you that if you don't find the guidance in IFRS, in the SME standard, there are a number of different steps you can take, a number of different ways that you can analogize and look to. And specifically, it tries to avoid the fact that you should look to the full IFRS, because we want people to be able to pick up the little book and only ever have the little book. But a lot of people do think that if I'm applying the little one, I have to have a knowledge of the big one. Educational. The jurisdictional reach and recognition is quite an important one in the region I come from. The region I come from, Africa, if you like, there are a lot of countries that actually have no requirements for full IFRS. They just don't need it right now because they don't have listed stock exchanges. Their banks and other financial institutions are very often subsidiaries of countries that apply in US GAAP or IFRS or whatever, and that's their primary standard. Or they're in a situation where there's actually a special GAAP that the country's introduced for regulated entities. So jurisdictional reach is one of the important things that we need to think about with IFRS for SMEs, because it allows us to go into jurisdictions where IFRS may not have been important or may not be an issue as yet. But those countries will eventually become IFRS users, and it starts them on the first step of the process. This sort of leads us to the economic development discussion, and I think this now plays into the previous presentation in quite a significant way. In developing countries, there is very often an absence of a formal network for accounting standard setting. There's an absence of resources to actually prepare and set up standards. So for developing countries, IFRS for SMEs plays a very important role. It is a standard where very often no other standard exists, or a standard where what exists is a very outdated standard, or a standard for countries that have adopted IFRS but don't have the resources to do it properly. So it fills an incredibly important space in those countries, and very often it's the only standard that those countries need. Developed economies have a completely different situation. They very often have an existing accounting standard. They very often have something like the German accounting standard that exists in place for those, for small companies. That particular standard that they have is normally suited to their specific requirements. IFRS is the primary thing they need to communicate around the world, and they have something else that fills the gap at the SME level. And so IFRS for SMEs is not necessarily as relevant for those countries as full IFRS. We've just gone through a comprehensive review. We're kind of in the middle of deciding what that comprehensive review means. I think we heard somewhere earlier that we've had comment letters and etc. on the process. I promised you I wasn't going to go into the technical side, so I'm not going to really do any of the technical discussions that have come out of that comprehensive review. And I did want to touch on a couple of important points, I think, that have come out of the process that kind of give a feel for why we're starting to think about some of the issues that have come through. The first one is that we heard conflicting messages. A lot of people were saying the most important thing you do is you keep IFRS for SMEs simple. You keep it short. You stick to the 225 pages or whatever of it, and you don't extend it beyond that. But we would like an option for fair valuing our property, plant and equipment, or not revaluing our investment property, or development costs, or capitalization of borrowing. So the problem was that we were hearing two different things here. People wanted it simple, but everybody had their one add-on option that they wanted. And once you start adding all those one-add-on options, it becomes a lot bigger standard suddenly. It becomes a lot more complicated. So you end up with a conflicting requirement there. Another thing that was quite important in the feedback we got was the feedback on publicly accountable. There are a lot of informal exchanges across the world, small exchanges where a relatively small number of shares are swapped. People said, well, why can't those companies qualify? Why aren't those able to use IFRS for SMEs? We heard about credit unions, very, very small bank-type organizations across the world that are suddenly being forced to use full IFRS because they are disqualified from using IFRS for SMEs. They felt that the public accountability thing was actually an unfair or an unwarranted definitional point to bring in there. We had quite a lot of discussion and interaction with people on the speed of adoption. How fast should IFRS for SMEs follow IFRS? So we've got IFRS 9 out there at the moment, we've got IFRS 13, we've got the changes to IFRS 3, we've got 10, 11 and 12, a whole bunch of new standards that are coming out with a relatively rapid development speed of full IFRS. How quickly should those translate into translations of IFRS for SMEs? How quickly should we be trying to adapt the small standard to reflect what's in the big standard? And then one that I thought was really interesting in terms of the overall perspective of IFRS, because it's a more difficult one to answer. How open should we be to people using the fallback to full IFRS? And let me explain what I sort of mean by that. When we adopt something in full IFRS, we adopt it because we think it is the most appropriate accounting for a particular circumstance. So let's take IFRS 10. We think that the IFRS 10 describes the most appropriate control mechanism for determining when you control an underlying entity. IFRS for SMEs is a little bit behind the scenes with that at the moment. It's not quite got there. So it's got an older version of control and it's got a much simpler version of control. Should we as the ISB be open to at any stage allow an entity to refer to full IFRS and adopt whatever full IFRS says? Because we've already acknowledged that that's better accounting. We've put it into full IFRS because it's better accounting. Should we allow it? The alternate view to that is that that will mean that every time you pick up a set of IFRS for SME accounts, you won't know to what extent it is IFRS for SME you're looking at and to what extent it's full IFRS that you're looking at. And so these became kind of, if you like, existential questions. Why are we doing IFRS for SMEs? What is the purpose behind it? How do we actually translate it? One question that did come up that I didn't put on the slide, but it's actually worth mentioning because it has quite a lot of relevance for a few things, is the name of IFRS for SMEs. And a lot of people came back to us and said, you got the name wrong. And they spot on. We got the name wrong. This is not a standard for SMEs. This is a standard for non-publicly accountable entities. Most of the time they're the same thing. but they're not always going to be the same thing. And it's one of the questions that we kind of debated a little bit at the SMEG level, and in the end decided it probably wasn't worth the effort it was going to take to change and rebrand and get people used to the new idea. And we acknowledged that this was an extensive discussion 4 years ago. And sometimes you just need to move beyond the name. But it is something to be aware of. I've seen truly massive companies in the country I come from, South Africa, that apply IFRS for SMEs. And they apply it because they have only one shareholder, they don't borrow money, and therefore why do they need to apply full IFRS? And that's consistent with the objective of IFRS for SMEs. For companies where the shareholders, the other users of the financials are very close to the company. And that doesn't necessarily hold any relevance to the size. Okay, so taking those things in and bearing in mind that we sort of at a natural reflection point, if you like, from an IFRS perspective, or from an IFRS for SMEs perspective. And there are a couple of points on the slide there why we're at the reflection point. Comprehensive review is one of them. IFRS for SMEs to an extent has become an established player in that space. We've seen the evolution of IFRS for SMEs over time, the way it has evolved in this particular issue, the way, for example, Europe and European countries have chosen not to adopt IFRS for SMEs, but other countries have chosen to adopt IFRS for SMEs even though they haven't adopted full IFRS. So we started to see those kind of evolution of the way things are working and the way things are evolving. We also, it's probably worth saying, are into the post-Paul environment. And that has made quite a big change in the way we think about IFRS for SMEs, because Paul, and I imagine most people know Paul Pachter, Paul was somebody who put an awful lot of energy into IFRS for SMEs. He really wanted to do this, create it, make it happen. It was a real passion for him. And the SME standard has benefited hugely from that passion. As Paul, now with Paul having retired and moved on, we started to look at IFRS for SMEs more from a collective perspective. Other board members are becoming more involved in the process, and it's becoming more of a discussion issue and something for us to talk about. And so that started to get the conversation going about where we see it fitting and how it works. Should make a statement here. When I talk about the reflection, I'm talking about we. Whenever we talk about things at the ISB, we usually use the term staff. So staff thinks, or staff has thought, or staff suggests, or staff recommends. In this circumstance, when I use the term staff, what I mean is anybody that I happen to have chatted to over the water cooler over a cup of coffee. There hasn't been a particularly organized process here yet. This is almost the first start or the starting point of the process and starting to get views. And in particular, this hasn't gone through SMEG or through the board or anything like that. It's really the thoughts that have come out as ancillary to the main process that we've been going through. Okay, so what is IFRS for SMEs then? So taking that discussion and now starting to distill it down into a couple of thoughts. And these are really four conflicting views that you might take of what IFRS for SMEs is out there, what it's supposed to be doing. And the first one, and maybe some of these words are deliberately incendiary, but the first one is a necessary evil. It's something we did to fill a gap while we were developing our own main standards, while we were actually doing the work that we actually thought we were paid to do, which is developing full IFRS. We developed this as a little bit of a place filler because we acknowledged that there was a need for it in at least some jurisdictions. And so it was put in place there as something that would kind of hold its value and stay out of its way. And if you look at the dissenting opinion that was issued when we issued IFRS for SMEs, that's what it says. So Jim Leisering looked at this and said, well, this isn't our job. Our job is to produce full IFRS. Our job is to be accountable for full IFRS. Our job is to come up with disclosures for full IFRS. This isn't our job. And some of the board members still hold that view because some of the board members would say that this is a distraction from the primary function that we've got. You could also consider it a loss leader. Now, again, what I mean by a loss leader, effectively a loss leader is something that we plug in or we put out there for countries that really need it, for no other reason than to get countries and companies onto the IFRS ladder. The primary intention of this thing is not to have a standard for SMEs, but to have a standard that will help people up to take on full IFRS when the time comes. It could also be a transitional stage, and that's a similar type of concept. If I were to separate loss leader and transitional, loss leader is probably more aimed at jurisdictions, so helping get jurisdictions onto the ladder. The transitional stage is more aimed at trying to get individual entities on, so entities onto IFRS that will later adopt them. And finally, it's an integral part of the single set of financial statements. It really is the single set of financial statements. Each of those in turn drive the way that we will think about these standards going forward. Drives the way we'll think about them from a technical perspective, but also from an operational perspective, the way that we'll put them into place. And the kind of things that they will drive is alignment with full IFRS. How close should IFRS for SMEs be to full IFRS? If I'm thinking about those different requirements, then I start to think about them in this space. And each of those different scenarios, necessary evil versus single set, helps me think about how close these should actually be. The timing of changes, how quickly should changes follow? And maybe the most contentious one for us is overlap. How much should there be an overlap between these two sets of standards? How much should people be able to use them who we perhaps would have thought should actually be using the other one? From an operational perspective, promotion and facilitation of adoption, do we get out there and really try to push people to use IFRS for SMEs? Because we think it's part of the language, we think it's part of the single set. It's like deciding that I'll adopt IFRS, but I'll choose not to adopt the revenue standard. Or do we say, actually, this is a kind of a happy add-on, you choose whether you want to use it, you make the decision based on what you feel is best for your own jurisdiction, your own company. Branding and intellectual property, and the ISB pricing and support. Do we try to charge people for this? Do we keep it free as a sort of a stepping stone? Do we provide more support or less support for it on an ongoing basis? The next 4 slides are maybe a little bit of what can be taken away, and I'm going to go through them fairly quickly. In fact, I'm only going to cover the 2 extremes. I'm going to cover the first extreme, which is the necessary evil, and just talk through how you would apply those things. And the last slide, which is the integral set, and then I'll stop there. So if it's a necessary evil, I align with the conceptual framework. I try to keep it within the conceptual framework. But because it's a necessary evil, its direct, exact alignment with IFRS is not so important. It's not the biggest issue. So I'm free to actually look at this in the context of saying, whatever is good for SMEs, whatever is good for those jurisdictions that are going to adopt it, I should put into the IFRS for SME standard. And if it's not exactly the same as full IFRS, that's not a problem as long as it is consistent with the conceptual framework. And the conceptual framework becomes the most important thing there. That also means that from a timing perspective, I'm not nearly as worried about timing. So I can take time to adopt changes in full IFRS into IFRS for SME. I can allow full IFRS to evolve over time, to test concepts, to test principles before I need to adopt them into IFRS for SMEs. But there should be minimal overlap. I don't want the one product to cannibalize the other product. I'm giving it as a stepping stone. My primary purpose behind this is to facilitate people eventually getting to to IFRS, so I don't want to cannibalize the process. I can explicitly allow jurisdictions to amend the standard. I can actually go out there and say, you're welcome to adopt IFRS for SMEs, and if you in your jurisdiction want to adopt IFRS for SMEs and have the option to revalue property, plant and equipment, that's fine. Because I'm not trying to protect my intellectual property. I'm not trying to protect the brand IFRS for SMEs. I'm not trying to put it out there as a single standard. Use it. Change it. Adapt it in whatever way makes the most sense for your country. If it's a necessary evil, and we'll get to some of the other ones later on. I'll bounce straight on here. Let's go to transitional step. Transitional step, what I'm looking at here is companies coming in and using IFRS for SMEs with a view that their next step is using full IFRS. Okay, I'm using this simply as a stepping stone from one to the other. Now suddenly what changes is the relationship between full IFRS and IFRS for SMEs becomes critically important. I want them to be exactly the same. I don't want people to have to undertake huge changes when they move from one to the other. So I want them to be the same. I want the timing to be as quickly as possible. So as soon as we change something in SMEs, we need to make the same change in IFRS, full IFRS. I'll still take account of the requirements of the SME group, but it's in the context of my primary driver being that the 2 sets of standards need to be as similar as possible. Again, because it's a transitional step, I'm going to be comfortable that if in Germany has an equivalent IFRS for SME, an equivalent to IFRS for SMEs that works fine in that environment, I'm not going to be particularly worried about forcing the introduction or trying to encourage the introduction or trying to make it a big deal, because that's also a transitional step. People can also go through German GAAP and transition to full IFRS. So I'm not going to be too concerned about it in that sort of space. But I am going to be concerned about my intellectual property. I'm going to be quite protective of IFRS for SMEs and quite protective of when the title IFRS for SMEs is used, because there's a reputational issue in making sure that people are using the SME standard, are using it properly and are using it as it was intended to be used. The final view here is single set. Now, single set, it's part of an overall body. It's like I would talk about, for example, the revenue standard in full IFRS, so it's part of the total package that I am selling or trading in as full IFRS. Again, it must be aligned with the conceptual framework. But again here, because it is part of, so when I write an insurance standard, I'm taking very specific cognizance of the fact that insurers have different requirements, have different needs, and I'm comfortable that insurers should be able to, I'm comfortable that it might not be fully consistent with the other standards I've written. So insurance liabilities might not be fully consistent with IS 37 liabilities, because I'm tailoring it to the specific requirements of that group. It's in the bigger body of standards and specific people who will use it. Likewise, the timing they don't need to immediately translate changes from one to the other as soon as they happen. The minimal overlap still counts, and it's even more important here now. I'm not going to allow an insurer to use IS 37 for their insurance contract liabilities. I've defined what insurance contract liabilities are, and that's when you must use the insurance standard. Likewise, I've defined what an SME is or what a non-publicly accountable is, and I don't want somebody to use it who is not an SME. I don't want somebody to use it who's not in that qualifying. So the overlap becomes really important there. I'm also going to be going around encouraging the use of the standard as written. Again, part of my broader category, I want to make sure people use it as it was written, so that I expand the use of IFRS for SMEs as IFRS for SMEs across the board. And then the rest, I think, pretty much stay where they are. So I guess that was the points, the different angles that we started to think about this. Now, as I mentioned earlier, we're not very far down the route. We're just really talking about this over coffee and the water cooler. But I think it's going to become a evolving part of our discussion, particularly as we start to get the comments back on the exposure draft. Because when we get the comments back on the exposure draft that's going out in the next couple of months, people are going to start asking us questions about why we took particular decisions, and they're going to start suggesting alternatives to us. And this sort of thinking is what's going to provide us with the framework for how we answer some of those questions. Thank you.